Hi everyone, let's have another look at the markets. They have not gone as planned. A couple have, a couple haven't, and that's always the way that it goes. Um, Gold has not bounced as I expected, not yet. In fact, flushed down past 1200 painfully, taking out a lot of bulls in the process and sending short interest to a 3-month high. So we're setting up for a short squeeze in gold. If you saw the Greek finance minister on YouTube saying that Greece should default yet remain in the euro, go ahead and short gold and let me know how that works out for you. So far, the shorts have done really well. We're having an inside week right here. MACD is still firmly pointed down in negative territory on a weekly, um, but the downside momentum in gold is slowing significantly. We had really barely a down week here, and so far we're slightly down this week. This is triple witching week. I have a lot of options expiry this week, and the Fed is this week as well. So I do not expect this week to be calm. Um, I'm actually hoping for gold to slip down to 1120 or 1140 or so, perhaps even down to 1100, and then reverse massively. I think if you see that, as well as with a reversal in the dollar, you're going to see the top for the dollar and the bottom for gold. That's just my prognostication. The U.S. economy is slipping more and more and more every day. Gold is down overnight, but it's about flat. Um, the dollar no longer looks toppy. It looks like it's going to go to the moon. This was a nice sideways consolidation that I was afraid would build and blast off to the upside, and it did exactly that. Because apparently the market knows precisely what it is I fear. Here it is right here on the cloud. Lagging span looked like it was going to finally break down past previous price action and instead rocketed higher. Starting to look a little toppy again. Looks like the end of a move here. We do have 1015 here on the dollar is a pivot point from a long time ago. It is possible we tag that. But again, going into April, I'm looking for signs of a dollar reversal. We've already seen it in bonds. We've seen it in oil. And we're looking for it elsewhere. Here it is in bonds. This is a lovely little bounce, but again, as you can see, it's not going far. This is a weekly chart, and here's the MACD going down. We had a pretty good little bounce here, but the technicals didn't improve. If we want to go check out, I'm going to get volume on this chart. Yep. Selling volume is outweighing buying volume. That's not all that uncommon, but that's a bad sign. I am bearish on bonds. They are overloved. They have run far too far. And they are due to correct. That said, hanging right around 50 on the RSI on a weekly. That said, bonds can go sideways, and that's exactly where they're going right now. The bears are probably early, and the bulls are late. The bonds may very well have topped right here. I think we have a small gap up there. That doesn't mean that has to fill on the daily. No, we don't. Well, right here. Really broke down out of the cloud here. These 2 days are really beautiful shorting days. They were saying don't go long, and sure enough, if you got short, you get a nice little 3-point pop there. It's coming back up again, but it's below the cloud. It has regained the baseline, which is encouraging for bulls. And the lag span did bounce off the cloud, but it's got a little test right up here, right around 130. That's going to be a hard spot to break. I think you could see some latent strength here and then see him break down a bit more. Excuse me. Um, but I am not with a weekly chart that looks like this. Am I bullish on TLT right now? I expect this to break down further. Um, the Fed is going to threaten to tighten. Again, I've said this before. The Fed doesn't have to tighten. The Fed is getting all that it needs out of threatening to tighten. Just talking about tightening um, is doing all they need it to do and then some. In fact, a lot of people have pointed out the fact, and I agree with them, that the Fed has painted itself into a corner. Okay, the euro is trading at $1.05 as of right now. And if it breaks parity, if it breaks 1-to-1, a lot of things are going to start to break around the world because no one is expecting that to happen, and hedges everywhere are building. Um, and you're going to start to see deflation come back with a vengeance. When currencies strengthen, it hurts. Hurts U.S. companies selling abroad. You're seeing IWM starting to outpace. Look at this. Who has purchasing power? U.S. consumers. Their dollar is strengthening. So small cap companies that operate in the U.S. only, that sell to U.S. customers only, they are raking in U.S. dollars. The S&P 500, they get something like 40 or 50% of its profits from overseas. Not so well. It is struggling. Had a great day today. We're having a big bounce off 2039. The market got very, very bearish. Sentiment completely cratered again. That is horrible for bears. Horrible. Because it means that all the short interest is jumping in late. Um, everyone is selling too late, and everybody wants out. When everybody gets that bearish that fast, you get this. You get a massive 40-point turnaround. How far does this fall? I don't know. We can bounce up a little further here and then fall back again. I think we will. I think we have a date with a 200-day, right around 2000. I think that holds, and we bounce up again. When that happens, I don't know. We could very well do nothing here. We can bounce up, hit resistance, come down, find support, and just go sideways, and the 200 can rise up to meet us. That could very well be the course we take. I have no positions on the S&P right now. I don't like this market either way. I don't like it long. I don't like it short. So I'm looking for sideways. I do have the S&P 500 in my retirement account. I lightened up on it when we started to plummet here. And on any big rallies here, especially up to the magical 2150, I think we could tag. I will completely cash out of the S&P. I think we're headed for the end of this bull market this year. The bull market's birthday, March 6th, I believe. We had a nasty down day. Some people see relevance in that. Take it for what it's worth. But again, on the bigger picture is everything. All right. And what are we seeing? I've talked about this before. We're seeing this nasty divergence where the weekly MACD keeps making lower lows and lower highs, but the market does the inverse, making higher highs and higher lows. And we are going to see, get rid of this, quite possibly, and the bull markets don't go on forever, guys, all right? They have to end at some point, and this one's getting very, very old. August time is crash time, and if we make it this far, you're going to see, the MACD is still going down this week. It has not turned up, so don't get too bullish. I think you're going to see a little pop here, see us come down and pop again, maybe run quite a bit. But again, by then the MACD could be down here, right? Just gets weaker, weaker and weaker and weaker and weaker and weaker until it finally cracks. I don't think it's going to be an apoplectic crash. I just think it's going to be a very heavy pullback. I think 1750 is the wall that the authorities step in and officially push the panic button. That's what I'm looking for on any hefty, monstrous pullback. 1750 is an extremely key area, and it simply marks the beginning of real trouble for the market. I think we would see a very large bounce off 1700, and then the market will fight, bull and bear. By that point, the Fed should step in with QE4, and I think you'll see gold start to really accelerate and catch up. Gold will start to really catch up with the S&P. Gold has had a hideous 18 months. Well, the S&P has done very, very well. The S&P pays a dividend, of course. Gold doesn't. You get paid just to own the S&P. But I expect that to even out. Remember, back in, I don't know what it was, go look it up, 2006, 2008, 2009, one of those years, gold was up 30% while the S&P was flat. The S&P was flat to down or barely up, and gold was up some 30%. Silver was up even more. I think silver was up 40%. So you're going to have those years where, for whatever reason, deflation hits stocks and not the metals. Or else deflation hits the metals but not stocks. Stocks are quite anti-deflationary in that they pay you a dividend. However, they are equities, they are growth, they are at the bottom of the food chain in the debt structure, and they can get walloped, of course. They are also an inflationary hedge in that, again, they pay you a dividend, and the government cannot completely control companies, right? Companies can shift labor overseas, they can cut headcount, they have flexibility that the bond market doesn't have. The bond market is the government debt market, and the government debt markets are stuck. They have to pay their Social Security, they have to pay their Medicare, they have to collect taxes. They can only collect so much from taxes. They collect about 17%. After that, people just start hiding their money and spending it and doing whatever rather than give it to Uncle Sam. Because if you're taking home 80% of your money, no matter what you do, well, then I might as well spend it. Or buy some foreign debt or something that I'm not going to get taxed on by the U.S. government. So the government isn't all that flexible. Stocks are. Do not expect stocks to go to 1,000 or 1,200 or anything like that in some new super mega bear market. It's not going to happen. They will collapse the bond market first. In fact, the U.S. government's doing exactly that. It's taking all the money that the Federal Reserve Board is printing and they're spending it. They're spending all that they can and then some. That is horrible. Horrible, horrible, horrible. Because they will run out of money and then they will get really panicky and do something dreadful like a massive war or insane tax rates or who knows what. That's a pretty bad monthly candle follow through. We had a nice little bounce here off the lows on the monthly TLT candle. This is the 20-year Treasury debt, and this can come up and eat back about half of its previous candle. That'd be a nice little bounce. The MACD is still rising here, so that really gives us pause for going short. And again, we're still, you look at this trend line, if you believe in trend lines, we're still okay. We're still perfectly outside of breakdown range. That said, this could be a little bear flag. Bounce up, hit resistance somewhere up here, and then really break down. See 117s, lower, who knows. Rising interest rates will kill this economy. It's far too fragile. It cannot sustain rising interest rates. Right now, the Fed has the best of both worlds. Rates are still quite low. At the same time, the dollar is super strong. Inflation's low. The U.S. consumer is empowered, and they're doing well. They feel like they're doing well. They're in the driver's seat. The only thing they have real concern about is the total destruction of the Eurozone. That can also very well send the world economy into an utter collapse. The Eurozone's on borrowed time. You can't have people in Germany, very educated, very skilled, working 8, 9, 10 hours a day, very, very hard, and yet have people in Spain and Greece working 6 hours a day and want to retire at 40 on the same currency. It doesn't work. Currencies don't work like that. The currency strength reflects the purchasing power, reflects the overall work level, essentially, of its citizens. the production of its citizens, how much they produce. And the Germans produce a lot, and the rest of Europe does not. France isn't too bad, but Spain, Greece, they are not in the same league as Germany, or even Holland, or even France. So I'm expecting some true destruction out of Europe later this year. That'll be the black swan no one sees or no one wants to see. The S&P at this point I think is okay because every time we have a little bump, we have a little sell-off, all the bears come out in their bear suits and scream bloody murder. And you're early, guys. You're too early, okay? You're going to get squeezed running in with that short interest. Charts be damned, okay? All the moving averages are still rising pretty healthily. You still get a rising 200-day moving average. Every time we get near it, it's a massive turnaround. It's still rising. It's still fine. I expect us to go sideways at some point. When the 200 days starts to roll over, and even more importantly, the 12-month starts to act as resistance. See that here and here, which could come later this year. I'd expect some blood. If you start to see some warning shots across the bow, which I expect to see quite soon, I expect to see in the spring, early summer time frame, some trouble. Maybe some official words from Chancellor Merkel about how Greece is about to leave or should leave the European Union, should default. The Greeks are talking about defaulting openly. This is the way it works. First, it's discussed quite openly, yet it's not on the news. I don't see it on the nightly news. I see it all over YouTube. I see it all over the blog sphere. I see it all over the blog news. I see all this European characters openly talking. The Greece finance minister has posted a YouTube video in which he says Greece's best avenue is to default, not leave the euro, but default. The Europeans, the German Chancellor Merkel came out and said that she sees Greece defaulting, or maybe they ought to leave the euro. Was her words. These are key foreshadowing terms. These people are making a plan, and that plan is they need to listen to their citizens. They have no choice. They're politicians. They are elected. And in Europe, the politicians are afraid of their citizens, unlike in America, where the citizens are afraid of the politicians. And they want to keep their jobs. They don't want to be unemployed. Where are they supposed to go? And to keep their jobs, they have to do what the citizenry says to do. And I think it's time they finally did that. They've pushed it about as far as they can. The German citizens in a recent poll, over 50% said that Greece should leave. They are tired of bailing out Greece. They do not want to give Greece any more money. The Greeks in a recent poll said that Germany's being completely inflexible and they should allow Greece to remain in the Eurozone and loosen the terms of the debt agreement. That is not going to fly with the Germans. The German people want them out. The Greek people want to talk tough. The Greek politicians know that they have to be really hard. The Greek politicians are talking nonsense. They're talking about the Germans paying them war reparations from World War II. Guys, you're 70 years too late to that party. They're talking nonsense. They're talking absolute rubbish. That's not going to happen. Their plan is a wing and a prayer. Their plan is to pray that their debtors, their debt holders, release them from their debts magically. And that's simply not going to happen. So expect for the process to work. Okay, the political process can work. It will work. It hasn't worked for so long, no one expects it to. Right? No one wanted the U.S. to bail out its own banks, yet we did. Right? Everyone said, oh, that's it. The people aren't in control. The people are. They're just a little too lazy to do anything about it. But trust me, history shows that people always get fed up at some point, and they do something. What they do, I don't know. When they do it, I don't know. But when they do it, no one is really expecting it to happen. When the U.S. kicked the British out of America, trust me, no one thought it could work. It was the law of thirds. 1/3 of the people didn't care, 1/3 wanted them out, 1/3 were loyal and wanted England to stay. So that's pretty horrible odds for the side that wants to kick England out. You have 2/3 that are not on your side, and yet that's the side that won because they were steadfast and they were armed and they were willing to go the distance, and they finally got others to join their cause. All right, that's happening in Greece and Germany right now. Okay, the Germans that want Greece out are gaining people to their cause. The Greeks that want to get tough and want to tell the Germans to go screw themselves, they are getting others to join their cause. These two immovable objects are hitting head to head, and the results are going to be ugly. Okay, there's not going to be an agreement. Someone's going to win and someone's going to lose, or else both sides will lose. And I don't know when that happens, but I'm guessing it's going to happen this year because Greece is now going on a month-to-month budget plan with Europe. To get their bailout monies every month, they have to convince Germany they are playing ball. Every month, this is coming now to a head. And the Greeks are not backing down, and neither are the Germans. They can't. Their people are swinging against the other side. Okay? So the politicians, their hands are tied. They may very well have to sink the very country they're trying to save. And that country may be their own. But that's what the people are asking for. Unfortunately, people have horrible timing. They want, they should have gone through all this pain years ago. It would have been passed by now. Okay? But they put it off, and now it's going to be even more painful. And they listened to their leaders and bailed out the other side years ago and hoped for better days to arrive, and that hasn't happened. So they're fed up, and now they just want people to stop putting their hands in their own pockets. And who can blame them? So expect Greece to leave this year. Okay? This isn't going to be put off until 2020. That is over with. People don't seem to understand that. I don't see articles in the newspaper on the nightly news. Don't worry. We'll kick the can down the road. They'll come to a last minute agreement, and this will all get solved in the year 2032. That's not going to happen. I don't know whether Greece leaves in May or December, but they're leaving this year. They have another bailout package. Their latest bailout package supposedly gets them to June. They got 4 months from February to June, maybe July, and that's it. The rumor was they got 6 months. In reality, they got 4. So I see them getting no further than July or August. I think you're going to see Judgment Day. I think they're going to get to June or July, and they'll buy 30 days because everyone will be freaking out again. And that 30-day purchase that they make will calm everyone down. In the meantime, all the wealthy folks will pull their money out of the market. All the billionaires will be buying gold hand over fist. Everyone that knows somebody that knows what's going to happen will be preparing. Well, the little guy will not be. And then things will blow up in your face. Literally blow up in your face. And unemployment will soar. Greece will have a credit event. This will be a credit event. There'll be bondholders taking real losses, marking down on their books real losses, and you will see the debt crisis finally hit the governments, just like it did during the Great Depression. The Great Depression, all the private banks went bankrupt. The government stepped in and bailed them out. 10 years later, something like 3/4 or 2/3, 80% I think of all the governments around the world went bankrupt. They all defaulted on their debts because they bailed out the banks with money they didn't have. They borrowed money they didn't have, hoping the economy would recover and bail them out. It never did. Why would it? And they had to default. So repricing of government risk, government bond yields, is going to happen this year. Okay? And it'll happen in Europe. The Europeans, who are all enormously indebted and cannot possibly pay back their bondholders, will see interest rates of 6, 7, 8% and up, which they cannot afford. And you will start to see European nations defaulting, or at least tripling down on their money printing and bond buying, which should send gold soaring to the moon, because their only choice is to radically devalue their currencies and send their debt problems away with devalued, be able to pay back their debts with devalued currencies. That is the plan. That's always been the plan. That started years ago. They've come way too far to just stop. That type of printing will put a floor under stocks. You will not see stocks break past 1700 and hold down there. You simply will not. Okay? The inflation will come flooding into the markets. I think the Fed will go nuclear. They'll go even further, and they will force the banks to lend. They will punish the banks for not lending. They will provide an incentive to the banks to lend, and the banks will do so because they are going to lose money if they don't. And they will flood the economy with money, and the stock market will go bouncing back, probably on its way to 3,000, simply because these stocks will pay you a dividend. The Dow, the large dividend-paying stocks, will become the new bonds. They'll be less risky to own than government debt. The day will come, take my word. Take my word, it's coming. The Dow Jones has already hit 18,000. Okay? We've already experienced this. This is a monthly chart. Look at this. This is an uber bullish chart here. We've gone from 10,000 to 18,000. We've almost doubled the Dow Jones Industrials. These are old, boring companies. All right? They've almost doubled. Why? They're paying a dividend. They're bulletproof. They're ultra safe. All right? Even on a massive sell-off, we get down, I don't know, 14, 13,000, whatever it is, 15,000. When there's blood on the streets, feel free to load up on the Dow Jones. All right? They will flood the world with currency, and this will go to 30,000. All right? Same thing happened during the Great Depression. When no one wanted to buy stocks and they were really, really hated, they experienced some huge, huge upside. Because of the currency devaluation. It was driven by currency devaluation, not a roaring economy. Okay, the economy and the stock market are not the same thing. Looking at the VIX, looks all right. Bounced pretty hard. I said buy it around 13, 12, whatever. Got down here, and sure enough, it popped. I expect it to pop again. And then kind of hang above 13 or 14. This is going to have a monstrous, monstrous upside here one of these months. Going back to the S&P, we talked about that. Gold is starting to get interesting. I'd really like one more flush and then a green weekly hammer. I'd really like to see that right there. Down and then close inside the previous week's price action. I'm not seeing that yet. The downside slowing. That's encouraging. The MACD is still pointing down pretty hard. The other thing I'm keeping an eye on that I really don't like right now is the Stotch. And as you can see, this is pretty close to a bottom. If it hasn't bottomed already, it's at 4 and change. 3 marked a bottom over here. But look, the Stotch started rising, and we didn't bottom until many weeks after it turned up. All right, so if the Stotch turns up, it doesn't mean it's time to buy. That said, I do not see gold breaking down past 1,000. These imbeciles all screaming gold is going to go to $800 an ounce that are getting louder and louder and louder because gold looks so horrible. They're imbeciles. I cannot emphasize that enough. They are imbeciles. That will not happen. Okay? This was a minor problem at the beginning of the year. We experienced a minor geopolitical hiccup, and gold picked up $150 an ounce in 3 weeks. In 3 weeks, it gained 10%. All right, that's the type of purchasing power that's willing to run into gold on a hiccup. Greece is going to default, and you're probably going to see problems elsewhere, including Russia, including China, including Eastern Europe. And people think gold's going to go to 800. I hope they're right. I'll sell my car to buy gold. I mean, you couldn't, that's the deal of a lifetime. But that's a joke. It's not going to $800 an ounce. Cannot, will not, must not go to $800 an ounce. Okay? Gold technicals are pretty bad. It has lost the 200-day moving average. It's lost the 50-day. And it certainly needs a good crisis to rescue it. That said, again, do not write off gold. The daily is looking all right here. On the Stotch, it's climbing. We did have this kind of, this is really curious. The MACD started going sideways all of a sudden. I don't know if it's getting ready to flush one more time. It's getting pretty deep down into the sell area. The last time it got this deep, it started heading higher. This is getting pretty oversold. And as the MACD is grinding lower, price is starting to really slow to the downside. So this could be it for the downside in gold. It's about 50 points lower than I thought it was due to the strong dollar. But the dollar, I think, is nearing a top. Meanwhile, gold is starting to grind out this bottom. We actually went even lower. We actually went to 1140 overnight. And now we're grinding sideways. I think you're going to see March finish out with a little pop. But March is generally weak. March is always weak for gold. And here you see we've lost last month's gains. And now we're coming down to test the yearly gains. We opened at 1152. So gold is still actually bullish on the year. Excuse me, that was December. We opened at 1182. They're only down 30 handles. Only down $30 an ounce. That's nothing. And everyone's completely freaking out. Again, sentiment is a contrary indicator. When you see everyone freaking out, that usually means it's time to buy. We haven't given back all that much, although this is a lot deeper than I expected. I expect April, May, June, and July, and August to all be up months, all green months. Green, 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 green. 1,400 and change is not out of the question by August. See a lot of people buying 143 September calls in GLD. 143. That is right there for September. Right there. And September is here. Here. So that's a big move. That's what they're looking for. Again, we can grind up slowly in May and June and just kind of pop. 120 by June is not out of the question. That is not silly at all. And that's up 10 handles. Gold calls have finally come way down in price. I am a buyer of gold calls at these levels. I'm looking for roughly, and again, this is not a silly prognostication. You're at 1150 in March, 1250 in April, 1350 in May, 1450 in June. That's 100 handles a month. 50. Yes, 100 handles a month. That's not all that silly. It really isn't. Let's say you stretch it out and you make it July. So we go from 1150 to 1250. Say 1300. 1350. 1400, 1450 by the end of July. I am buying September calls. I am buying out of the money. I am buying as close to the money as possible. I'm not buying 143s. But thankfully, the price action is so terrible and everyone's so bearish, you can get, I think, 130s. You can get 130s or even cheaper, even 127, I think, calls for very cheap. I'm just going to go have a look at Yahoo Options. Yahoo Options is telling me that the September 18th expiration, remember, time is on sale in the options market. You want to go very long. The September 18, oh, let's see. The 132 call is going for 77 cents. The biggest outstanding stake is 11,200 open interest, 11,277 contracts in open interest at the 130 call, which is trading for about $1. Last was 97 cents. And that's the 130. That's right here. If those people are right, their contracts will be worth, and gold hits 143, that's a $13 contract they're buying for $1. Just something to think about. Maybe something you want to throw 500 bucks at if you can afford that much. All right. Keep an eye on this. I'll come back monthly and we'll revisit. Next month is a big month for gold. I prefer to see a monthly hammer, at least a weekly hammer. Nothing yet. Hopefully we get another little flush to 108, 109 and a turnaround. Watch for it.